Coming at y'all again with another banger. Different little video for all my beginners out here that are getting used to buying stocks in the market because this is an essential tool that we need in life. So just want to go ahead and just give a little rerun on how to do it. Because I mean it's very simple, but you definitely want to know some steps to it, to be honest, That's everything in life. But matter of fact, let's get into the video. First and foremost though, step number one is where do you buy stock at? That's a big question because if you're very new to this, you're gonna have no idea where. So let's just go to our good friend Google and let's look where. What you want to look for though is brokerages. So let's just Google that. Like it's really that simple. It's a Google search. What I would suggest for me, what I would suggest is look something up like this, and then go over the best brokerages. The ones that I use Coinbase for my crypto, Robinhood, and I use Fidelity for my long. I'll use Robinhood for like my short term options and leaps plays, and then I'll use Fidelity for all my safe and like long term investments that I'm probably not gonna touch. Which I like just having them in different places because I don't want it all in one place. I want to have it all separate. You don't have to do that, but that's just me personally. That's just something I would do. But I would suggest definitely E Trade, Fidelity, Robinhood, Webull. Like Webull and Robinhood are definitely the most beginner friendly out of these. And I really wouldn't suggest Fidelity for options and stuff. I would just say Fidelity for long term because the app is kind of not the best for quick stuff. It's more about the long term and just like you're buying shares on here. And then Charles Schwab also. And another one, Thinkorswim, if you're playing with the big B roll, that's definitely good. And a lot of days now, a lot of banks have like their own stuff now too that you can invest in. It's a lot simple than you would think. But that's step number one. That's how you get into the companies. Number two, let's go over what determines buying like a good stock or not. So number one, when it comes to buying a good stock, you want to see innovation. That is key. Like you want to have bright hopes for them. Like say, let's think. Like you want to also, so you want to have bright hopes for the company. That's one. And then number two, you also want to just make sure that it's a good business model, something that you believe in personally. That's really the key. And also you want to check out their CEO and make sure that they're good. But this is very important. This is definitely one of the most important steps, and this will be checking out their balance sheet. This is very simple. All you have to do is go to Yahoo Finance, and let's just say NVIDIA. Keep it simple. Everybody here should know what NVIDIA is. If you don't, I don't know what to tell you. So this is the best company in the world. Literally the best company in the world. It's taking a little minute to load. I'm sorry, y'all. Alright, Yahoo Finance is being weird. It's that. We're not even gonna do that. So what you can do is go onto the chart. If you're buying stocks, you definitely want to make sure you have TradingView. But you go into TradingView, you can hit this little E right here. This is an earnings report for a company. Earnings reports come out 4 times a year. Every 3 months, companies have to report their earnings. You have a quarter one, quarter two, quarter three, and quarter four. So when you're checking out earnings, you want to go to their balance sheet and you want to make sure like their equity is increasing while their assets, like you want to make sure their assets are going up also and not too many liabilities. Like you want to make sure it's a good balance. This is the best company in the world. Not all companies are going to look like this at all. This is just a quick example. And you also want to go to their income statement and go to their gross profit. And you can do this all from TradingView. And we're going to do a lot of stuff here from TradingView, but you can go all the way back to 2017 on TradingView. But for Yahoo Finance, you can probably go way back, but you might have to pay for it. But for this, you want to check out their gross profit and revenue and make sure that it's like steadily increasing. Like you see how like good their revenue and gross profit is like just steadily increasing. You take a little dip right here, and then we come right back up. They're probably investing more into the company to make more. But you really want to pay a lot of attention to these two stats right here because they're really all of the company, honestly. Like as long as these financials are coming up, this company's stock will always come up, and this will always be a great asset to own. Simple as that. And then step number three, definitely is like understanding your risk and understanding fundamentals. By fundamentals, I mean stuff like price to earnings ratio. P/E. If you go down here, you can also look at this on TradingView. You can also add on the 52-week range and like the day range. I definitely suggest the 52-week range because you can see like how this company's been doing over the past year, and this is absolutely insane. Nvidia was $86 in March, like not May, like March, April, sometime around then. I don't know. Just know that I was spamming the fuck out that buy button. Like it's crazy that this was $86, and now it's all the way. The high is 212. We're definitely gonna go higher. It's crazy. But yeah, fundamentals, price to earnings ratio. Let's go down here. Price to earnings. And this is a crazy uh, price to earnings ratio. I mean, it's obviously the best company in the world. And then also, you want to know its EPS, which is earnings per share. So this is about like the average like earnings per share for every shareholder. And also, if you don't know about dividends, some companies pay dividends. This company doesn't pay the biggest dividend because they pump so much. Honestly, there's really no point for them to pay dividend. I'm not really a big dividend guy because I'm not that rich yet. When I have M's in my account, I'll definitely become a dividend guy because you can actually do something with it. But a lot of companies do pay dividends. This company doesn't really, but you want to pay attention to the dividend yield also. This one's only 1.14%. I'm trying to think of a company that pays a good dividend. I think Oracle does. So you can see like a decent like percentage. See like 41, like almost 42% they're paying out in dividends. And then they retain the rest. But 50 cents is honestly pretty good per share. I mean, I'm not a big dividend guy. I'm just letting you guys know the basics. And you also want to pay attention to the market cap. I forgot to point this out. So we go to this company. Their market cap is almost 700 billion, which is insane. And then also in TradingView, step number one also with the brokerage. I might have missed this, but with the brokerage also, make sure that you get TradingView. Like that is really key because this really shows what's going on inside the stock. And also, all you have to do is just go to like you can go in here, click this and go to the financials, and you have everything you need here to know about the company. You have its market cap, dividend yield, price to earnings ratio, basic earnings per share. The CEO, that's weird, it's not listed. That's very weird. Normally the CEOs are listed. I know who the CEO is though. I can't think of his name though. But it also tells you when it was founded and how many employees they have. Gives a little basic, little detailed description about what the company is. Doesn't really matter unless you don't, like you haven't done your own research already, which you should be doing your own research. And it also tells you their debt, interest payments, cash and equivalents, and market cap, which is great to know. Also, how many free floating shares there are. It's valuation ratios, see how it's going up over time. Love to see that. You want to check out its growth and probability. All just great charts to check out before you buy stock. I don't really check out these down here, to be honest. All you need is the stuff up top and then their statements and their balance sheet. That's all you really need. And then let's get to step 4. I don't want to hold y'all too long. I'm going to make it as simple as possible. I was kind of jumping the gun on the last one, but step 4 is definitely knowing risk management and diversification. If I'll show you right here, this is my own, like my whole portfolio of what I own in stocks. I don't own MP anymore, but we're going to get back to that later in the video. I don't own MP anymore, but also like you just want to have diversification. Like I have Meta, Nvidia, Tesla, mainly because they're top 7 stocks that you just basically have to own. I have Coinbase, I have crypto exposure, I have a lot of XRP, I have Bitcoin, shares ETF. Don't own any Bitcoin, but I do own the ETF, so I basically do. AMD, Google, Applied Digital. I have a lot of AI stuff, but I mean, that's the next wave, so it's like, it's whatever. And then I also have some healthcare stuff. Thinking about selling NVO though, because I really wanted to like just control my risk on a lot of stocks. Like it's very hard to lose money long-term investing, but this company really just hasn't been going up. So this is a great part of like risk management. Like they can still go up definitely, but I'm not the biggest guy on healthcare. And when I bought them, I was thinking, okay, it's looking good. We just tapped into this level over here and started rising up. But now it's back to that down trim mode, and I'm just not liking it. So I'm definitely going to trim this week probably. And that's just an example of risk management. Simple as that. Like, you don't want to let these stock losses get too slim, and definitely don't invest an amount that you're not willing to lose. On a long-term investment, it's basically impossible to lose it all, but never say never. You never know this market. And there's going to be times where we're very red for a long time, and you're just going to have to sit back and just ignore all them losses and just know that you need to be buying on the dip. Honestly, that is the most important part. Buying stuff on the dip is really the key, because that's how you easily triple, quadruple, 10 times your net worth, like that. But yeah, diversification, like I was saying, like I got my healthcare stuff, I got some financial stuff. I don't own any quantum stuff because none of these companies are actually profitable. I don't even know why this is in here. We used to have this, but it's kind of like an Asian DoorDash. Lululemon though have some fashion retail stuff. Lyft, this Lyft is a great stock. That's my baby. Oh wow, it's breaking out. Entered off this bull flag right here on a long plays. And then Webull, I have a leap in this. It's not been doing the best, but this is another financial stock. Then I was in the rare earth game, but kind of did me wrong. Entered a little too soon. I entered about like in the 80s, thinking we're about to pop, but that went wrong, and we came back down. This is definitely probably still a good stock to own, but this is another example of risk management. You want to manage all your risk when you're buying shares, most definitely. But yeah, I think I bought this around about like right here or so, and then I sold like down here like 65 because I didn't buy too many shares. I wasn't too bullish on it. Like around like here, I sold once we broke through because it's like, okay, I don't want to lose too much money on this. Like, you just got to control your risk. That's very key. Preserving capital is priority number one in this game. And if you don't preserve that capital, you're going to be sad. That's all I'm going to say. But if you're investing in good companies like I've taught you and checking out their earnings reports and everything and liking them, you shouldn't run into this problem. Genuinely. But also, the last but not least, I just want to go over the power of compounding and like just long-term thinking. Like with the options and stuff, you need to find a balance. And if you don't know about the investment calculator, hey man, you missing out. You're not a real hustler if you don't know about the investment calculator. If you're a real hustler and you be in this investment calculator, let me know down below. But back to the video. My bad, y'all. But this investment calculator is that shit. But let's just say over a 10-year period of time, you start with about 20,000. I feel like you can easily get about a 30 to 45% return annually over 10 years. A lot of people might say that's crazy, but I don't think that's crazy at all if you're running like the right stuff. Like, obviously it's not so hard to run the right stuff, but with long-term investing, it's really not hard at all. Like, you have so much time to work where it's like there's nothing to be worried about. It's not like day trading or anything. But with the investment calculator, say you got 20,000. Let's do 10,000, because we all young. You know what I'm saying? I started my first 10. That's like when I really got into investing. Let's say you start with 10,000. 10,000 that you would really just blow or put in a savings account that would make no money. Say you're getting 30 to 45% annually, and say you put in a rack a month. That's the key with the stock game. You got to continue putting money in, and that's most definitely. Let's contribute at the beginning of each month. And let's calculate how much money you'll have. See? Oh, I'm bugging. I didn't mean to do that. Let's say 30% just to play it safe. Bruh. Over 10 years, if you get a 30% return, like this is insane. You'll make almost 600,000 on only putting in about 130,000. So you're gonna 6 times your money. And don't let you in, like, if we have a really good big dip or like a really big recession or something, bro, like you can easily get 100%ers. Like my portfolio this year, just off the tariff news, which is only a 20% correction. Like we don't get them too often, but we do get those. Like it's not too rare. Like a COVID dip also, like a dip like that. But just off the tariff dip, I'm up like 100%, it's like 150% on a lot of my positions, just because the market was so low and we came back up so high. But yeah, Like, just take a look at this investment calculator and just think like, damn, it's really that simple. Damn near a mill over 10 years. You had that shit sitting in the savings, you would have 145,000. Probably made it a little bit off interest, and that's about it. Let's just say only put in 500 a month, and you start with 5,000, but you're still getting a 30% return. That's still 364,000 at the end of 10 years. This is only 10 years, and a lot of y'all watching this are probably young like me. So imagine when you're 30, you got 400 bands in your bank account or your investment account just because you decided to lock in and invest. Like, it's really simple, y'all. Y'all are missing out if you're not locked into the game. I'm not gonna lie. This shit would change your life. But last but not least, y'all boys make sure to tap into the Discord, man. Link down below. Lifestyle trading. Y'all know the motto. Lifestyle for life, man. We got boys balling out in here. We be active. It's been pretty calm, though, recently. Not much really going on. But a lot of new members. We're about to tee back up, man. Because, hey, the government's back open. So that means we got data wicks, better price action, everything. We're about to go crazy. Just wait. Just wait. But hopefully the government gets opened up back soon so we can get this news right here Thursday and Friday and have 2 banger days. But yeah, appreciate y'all for tuning in. I'm going to catch y'all on the next one. New video coming up probably Thursday or over the weekend. Multiple videos a week coming from now on. But appreciate you for tuning in.